Welcome back. You're watching Indian Open right here on Bloomberg Quint. PS Jayakumar, when he took over as the MD and CEO of Bank of Baroda, had sought some time from investors to turn the bank around. More than 2.5 years later, though, the public sector lender reported a quarterly loss yet again. So Vishwanath Nair started off his conversation with PS Jayakumar by asking him how long before the investors' patience is rewarded. This is what he had to say.
The patience was not only with respect to the NPA numbers. There were a couple of other issues as well. One issue was related to the franchise growth of business in terms of deposit, customers, etc., etc. And there was also the question about how to make the bank competitive and join the best in class, so that it could meet the future, which is going to be different. This has been different from the past. In fact, a lot more changing, a lot more faster on account of technology, etc. So the agenda had three things. How do we restore the growth? How do we make ourselves future ready? And then, of course, the legacy issue as it related to the NPA. And we've been working on all these three items concurrently. And as you can see from the business results that are there, the effort with respect to focus on growth is beginning to show some clear signs of progress. This year we have grown balance sheet, the domestic asset business, mass and manus, by about, say, 18%, 17.69. And within that, if you see, the retail businesses have grown quite robustly by some 40+%. The current account, savings account ratios have also gone north of 41%, which was not the case when I came in. It was 33 or 32. And so that progress is visible. You've seen a slew of product launches, product extension, a lot of things to do with people training, development, which has also taken place. As far as the NPA is concerned, to a large extent, or to most extent, it's a legacy issue, and also been consistently affected by the economic environment of the day. To that extent, it has not been something that is fully within our control. Now, the NPA story might not have been as it looks today had the recovery process been a little bit more robust, and that has been a little slow for a number of reasons, including the time it takes to get a new legal regime in place, and the new legal regime has to establish precedents, analogies, etc. So there's a consistent level of output from that. So that also has in some sense affected our recovery. So if you only have flows one way, which is a lot of flow into NPA, but little flow coming outside that, then you get into a situation as we are today. But on the positive side, we're beginning to see some clear progress. And so as this year goes about, I do think we'll come out quite well. And while one cannot ever rule out, as far as we see today, our portfolio under watch list, as well as absolute SMA2, are at historical low levels for us from the time I came in. And therefore it's reasonable to expect the next year should be quite decent.
Now, this question is not just about Bank of Baroda, but also on a broader question about the public sector banking system, because this particular quarter has been pretty weak across state-owned banks. Some of the private banks also had weaker results, but state-owned banks have especially large losses reported during this quarter. Why should any investor or shareholder or somebody who watches these banks for work believe a bank chief when they say that the worst is over? Because the worst doesn't seem to be over ever. Every new quarter is worse than the previous one. So then why should you believe a bank chief?
You see, our business is not only about NPA management. There's a wider set of roles that we play as a financial institution, and something more on account of the fact that we have a public sector ownership and character. So it is that. But we must also give recognition to the fact that for a number of sectors, the expectations with respect to the improvement in the sector has not exactly played itself over in the last 12 months. Power is a case in point. But even if you were to take the power sector and look at it for the next 18-24 months' time, we are seeing significant increase in the value of traded power. Presumably that is going to result in more PPAs being signed because they are at considerably higher value, higher cost than PPAs. And those in turn can then again bring certain degree of stability. But the fact is, if there have been delays in completion of the project, those are losses. The more the delay there is, or continuing delays, these losses tend to exacerbate. So to answer your question, I would say to you this way, that for all the banks, public and some of them private in the same sector, the results are, the reasons are quite the same, which is the resolution issues have affected everybody in equal manner. And the set of economic environment and those behaviors of those assets have behaved in a near identical manner. So it's not necessarily a public sector cost reason, ownership cost reason. It is a consequence of the assets that we financed, their outlook and their response to the economic environment and the resolution environment in which we have worked. But at the same time, you can see from the data, the recovery levels are improving and the provision coverage ratios are improving and the net residual issues are diminishing. So there is a logical point at which the problems would hopefully get resolved.
This quarter also, there was a divergence about nearly 3,000 odd crore for your bank. Typically, we've come to not expect something like this from Bank of Baroda, but then this quarter, this came as a bit of a surprise.
Yes. See, the divergence, in my view, what has happened for us was essentially the way we recognized those losses, those provisions, NPAs, was based on the consumer behavior with us in the way they behaved with us. So some of these accounts were fully compliant with the rules. The divergence arises because they were not paying to some other banks, and it's reasonable sometimes that we may not have all the information to make those decisions. In a couple of cases, we intellectually feel that what we did is right and we hold that position, but at the end of the day there is a regulator and the rules require that they follow them, and so we are following them. So it is not necessarily a deliberate error or intentional error or oversight or a failure to read the issue. It is just two perfectly reasonable people can have a different point of view. But eventually one's view prevails, one person's view prevails. And
is it because it's the regulator's view?
It could be regulated, sometimes it could be the court, it could be any number of reasons. But if you look at it, of the amounts that was mentioned as divergence, bulk of it was taken in the first and the second quarter. Certain amount were taken in the last quarter because the divergence report itself was disclosed, was closed only somewhere between January and February on the audit process. And some of those accounts which we have provided for in this quarter as a divergence have also been recovered in June. So, we can expect that the final situation to mirror to what we did. So, what would have happened had we recognized this, had we recognized these accounts as NPA? We'd have taken another 500 crores of losses, provisions in the last year. Right. And that would have meant this quarter, this year, would have been 500 crores better. But again, in the larger scheme of things, those are not material numbers, and the net financial results in terms of net worth at this point of time is precisely where it is today, whether we had taken it earlier. So I'm not condoning, we have to recognize losses, but this was not on account of an effort to manage the books of account. It was a genuine different points of view. Now a few other things have changed since then. Now there is a lot more emphasis on credit data. So we have concurrent information of how customers pay with the other banks. And since we are also looking at the repayment history with the other banks, some of these issues should not happen. That broadly is what I would say. But still, it is still possible, even with all of this said, there could be a point of view that we as operating managers may feel about a particular account. Right. A view that may not necessarily the regulators may hold.
Bank of Baroda tends to have a very large international presence as well as compared to some of the other banks in India. What is the strategy there?
In the current year, we did two things. We repaid all our professional market borrowing and we cut our placement lines. Effectively, those assets and liabilities did not represent any franchise value other than the fact they made us money, but the better uses of capital. Our customer liability growth continues to be strong. On the asset side, there are some discontinuities arising from the changes in LOU, the buyer's credit program, very large share. Now, it's not a revenue issue. It's just that the asset category, has to be because it's about using customers' money, right? And in that, we are looking at a number of programs like supplier credit. We also are seeing some significant increase in the interest of our customers in investing in the US and UK and other markets, so we'll do that. The entrepreneur community of Indian community in UAE continues to keep growing. So we are not seeing the growth only because of the two reasons. One is that the buyer's credit program has been somewhat muted. Also, we had for some period of time a stable currency and in fact an appreciation in the currency vis-a-vis certain other currencies. We also saw the runoff of the India development bonds and loans related to that. So in some sense, the portfolio has been static in a balance sheet sense, but qualitatively it is much superior because we are doing more host country lending, where we are having direct relationship with the customer, and there are going to be other spin-offs in terms of other relationships with the same customer, just as it's happening in the domestic market.
Last time we met in this room, you were talking about winding down the South Africa business. What's the status there?
It's done, or nearly done. We have exited our South Africa market. We have ceased to do our business. We returned bulk of our deposits, bulk of a loan, but legally and even otherwise, we have to provide for some time for customers to find alternative ways. With respect to our asset programs, we have got to sell the loans, we've got to find other finances for that. As far as it looks, it's proceeding very well on the expected lines. The balance sheet has extremely shrunk, but till the last deposit is paid, technically.
How far is that?
I think we're looking at not later than September.
Well, that's Bank of Baroda. Bring up the stock for the benefit of our viewers as well. It's marginally higher in trade. Maybe the pain is in the price, but remember for the last 18 months, it's been hovering around this 140 to 160 range, with promise that the pain will end soon. Somehow it doesn't. Hopefully will end sooner. Hopefully will be better for investors as well. Let's wait and watch. Okay, that's BOB. Dixon Technologies is the other stock that we should try and pull up for our viewers. New clients